No one fights for self-employed, unfortunately. Anyone that's in Congress or in the Senate, even if they started out with their own business, they turn it into a corporation eventually. But you can now take advantage of all that. And that's what we advise you on.
Today, we are finally digging into a topic that I've been really excited to get into for quite some time, the benefits of S-corps for self-employed individuals. But it's a complicated topic, and I've tried to explain it in the past. I've done some whiteboard stuff. I did a little illustration with blue water and vegetable oil, as one does when explaining complicated business ideas, but I want to make sure that I am presenting the most accurate information to my audience. So I decided to bring in an expert today, and I'm really excited to have Mr. Joe Matz join us. Joe is a true self-employment sidekick. He and his colleagues at Formations provide bookkeeping and tax management services for solopreneurs, including myself. I've been working with him and his team for a couple years now. They helped me get set up with an S-corp. They've been managing my books and doing my business taxes and just saving me a lot of time, a lot of money, and a lot of stress, and I am honored to be able to introduce you to him or him to you today and see if there's any way that he might be able to help you take your business to the next level. So, Joe, thank you so much for joining us.
Thank you for having me.
Let's jump right in. I'm sure you've interacted with a ton of self-employed folks over the years. What advice do you have? Do you have any advice? Any steps some 1099 pros could be taking to start treating their business like a business and, just gaining confidence in themselves as business owners?
Yeah. The first thing I always recommend is if you're going to be a self-employed individual, the first thing is you should get incorporated in your home state, wherever you reside in, wherever you're doing business. The main reasons you want to get incorporated is it gives you that legal separation from your personal finances and your business. And there are chances that someone tries to sue you. Having that LLC up keeps it from them being able to go after your home, your personal finances, anything like that. They can only go after what's in the business bank account. And we advise that you open up a business bank account once you get the LLC that's not tied to your Social Security, that's tied to the tax ID that you get issued from the state that you reside in. The other reason is it gives you better credibility, but just having that is something that triggers consumers that, hey, this person's verified with the state, they got, it just, you can seem more legit to us. So it gives you good credibility when you're out prospecting, reaching out to clients and stuff like that. So that's the biggest one I recommend to any self-employed individual, no matter your income. Get it done, especially before you make your first transaction, where you get your first commission check, depending on what services you do.
I was going to ask if you recommend, is there a certain income level or a certain time frame to file your LLC?
I would recommend right before you make that, when you're going to make your first transaction or you're past the startup phase, you're getting businesses. Anytime you have a threat of someone, being able to sue you or anything, but it also helps with cleaning up your books, doing everything, having that separation, we call it not having commingles of funds. So not having your personal bank account, your checking account, using a business credit card separated from your personal credit card. I know you use Relay. We recommend Relay's a great bank.
I first heard about them through you guys.
Yeah.
I didn't know about them until you guys started working me through the process. So this is really great advice. You talked about how an LLC gives you credibility for other people, but I also feel like it gives you credibility for yourself. Like that's a great first step to kind of just see yourself as a business and start moving you into that mindset of no, I'm doing this. This is my business. It's also, just practical. It's good. All the protections that it provides. But going into the next level, Can we start talking about
Yeah.
S-corps? And I think there's a lot of misconceptions
Oh,
about what an S-corp is. One thing that drives me nuts is I'll see a lot of videos out there saying, like, don't file an LLC, get an S-corp instead. I'm like, wait. Let's straighten this out, because an S-corp lays on top of an LLC. Is that correct?
100%. There is one state where you can be an S corp when you incorporate, and it's at the state level, and that is the toughest state there is out there. Unfortunately, that's California. And that's where a lot of the misconception happens. There's a lot of people, there's a lot of self-employed individuals in California. They've gotten the S corp, but they've only gotten it at the state level. In your case, David, in Pennsylvania, you got to get that LLC. And then what is happening is your business, your LLC, is now electing to be an S corp with the IRS.
An LLC and an S-corp aren't like mutually exclusive. An LLC is the business structure, and the S-corp is the tax election.
Correct.
I hope I'm
Yes.
representing.
And the whole reason you're doing that is now you get to reduce what you pay in self-employment tax.
Let's start this part of the conversation now. Can you give us a primer on S-corps and why they are beneficial for self-employed individuals?
100%. So the main reason is to reduce what you pay in self-employment tax. That's the number one reason. So there's a 15.3% self-employment tax that's taxed onto your overall net income. If you make over 60K net, you can reduce what you pay in self-employment tax by about $7,000. So that's a huge savings, because you're now paying yourself as the CEO of your business a reasonable salary, but that's only 40% of your net income. So then you reduce what you pay, that 15.3%, by average 60% or more.
So all of the money that your business makes, you own it all, but you pay some of it to yourself as a salary, and that's just to kind of stay compliant. So you're not like dodging all of that tax. What you pay in a salary, that's taxed at a different level than the rest of the money. Am I getting this straight?
Yeah.
So you have the rest, and that isn't subject to self-employment tax, and that's where the tax savings start kicking in.
Yeah.
How does that come over to you, though?
Yeah. So what's left over is your business profit. Obviously, you still have all the other taxes, federal, state income, blah, 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 everything else, but it's not subject to that 15.3%. And you can transfer that money right out of your business bank account into your personal taxes. There's no extra fee.
You get taxed on it as federal income, like that'll show up, but you don't have to pay the Social Security and Medicare tax.
Yeah.
So
you're not.
it avoids all of that. That's like the biggest savings. Okay.
Other ways that you can double dip in the tax savings by being an S corp, because once you're an S corp, you're in the same tax category as Boeing, Microsoft, Google, Amazon, and you get to take advantage of everything that's fought in Congress or the Senate, because it's all fought for corporations or W-2 employees. So now you get to do that. So you can do stuff like 401k contribution. So you're now the CEO and the employer. And the cool thing is you're the best employer in the world, and you'll match whatever you contribute as an employee 100%.
That's an important thing to bring up. Like the S-corp with all the tax savings, and sometimes the way it's presented, and TikTok videos and YouTube and people who are just trying to get some clicks and views, they almost present it like it's a tax dodge, but you still need to make sure you're doing everything correct, you're above board, and you're paying yourself a reasonable salary. Like you can't just pay yourself, $2 and then take, $100,000 as a distribution. Like you have to actually, play fair. We'll put it that way.
Yeah. One of our accountants was telling us a story of the real estate agent, and she was writing off everything, like her groceries, her kids going to private school, just anything that she thought promoted her business or made it so that she can do her business. Well, this is the best way I can say kind of the rule of thumb to think about when you're trying to write off something. Is it a requirement of your business? Do you need it to function? There's a lot of tech stuff, yes, you need, but there's stuff you don't need. If you have to get a license or if you have to get a certification or whatever you have to get that incorporation at the state level, they don't care about what you wear, what you drive. If that's what you think you need to get clients or something, that's what you need to do. You can obviously write off certain stuff on your business, but that's the big misconception is people, you talked about TikTok video. There was a video that would talk about buying buy a car that's over 6,000 pounds, a G-Wagon, a big F-350, and you can write it off on your business and stuff like that. No. Reason being is you need to have a qualification to have that vehicle. If you owned a tow company, hell yeah, you can get a tow truck because that's going to be over 6,000, but you can't do your business without that. So you need to have the justification for doing your business. If you worked construction, for instance, and you need to have, OSHA requires you to have steel-toed boots. That is a government agency that's requiring that. So that is something that you can write off on your taxes because that's what you need to safely do your job. So that's kind of the mindset, and that's where we come into play. You can always reach out to us, or if you have an accountant or something, double check with an expert before you think you're taking advantage of something you heard on TikTok, something you read on Google, because if it's too good to be true, it probably is.
I was talking to a friend of mine, actually had an interview with a former IRS agent, and his prevailing wisdom was, if you're trying to get away with something, it's obvious that you're trying to get away and hide money. That's not okay. We'll find that out. So stay above board and just be cool.
And you bring up a good point when you say like your friend saying like that was with the IRS. That's kind of like the cool thing. If you're over that 60,000 net income threshold, being an S-corp also reduces your likelihood to get audited about 10,000%, because the IRS just assumes anyone that's self-employed, and especially because when you're self-employed and you're just filing under, a sole prop, you're in the same tax category as maybe someone that has a farmer's market but still claims it on their taxes, but they only sell $1,000 a year. You do 500,000 net income, you make great money. Who do you think the IRS is going to go after? More money.
Yeah.
But when you're an S-corp, you're actually then, like I said, you're in that same tax category as those big corporations. So that's why they don't really go after you, because they're going to go after the companies that have billions next to their profit. No offense to, your business doing great and stuff, but that's why you dramatically lower your likelihood to get audited also.
That's an interesting statistic.
Yeah.
What are some other benefits of an S-corp? I know it kind of unlocks eligibility for different types of retirement accounts. Talk a little bit about that.
Yeah, so appreciate you bringing that up. So like I said, you're reducing what you pay in self-employment tax. So if you're making over 60,000, you can save, about 7,000 in self-employment tax. Great. That's a huge benefit. I recommend that threshold because you need someone to manage your bookkeeping. So you need to show a business ledger as an S corporation, and you need someone to do your payroll, and you need someone to file it. So obviously there's an ROI. You want to make sure you're still having a savings come back after you're paying for your service. But it obviously goes up the more income you make. But there's other ways that I refer to as double dipping into the tax savings. So let's say you make over six figures, you're going to save $12,000 in self-employment tax or more. But you can turn that into 15, 20, 30,000 through cash flow management. So now that you're an S corporation, you are able to take advantage of everything that's Fortune 500 companies do. So do your 401k contribution. Boom, that's 20 grand plus, depending on your age and everything like that, that you can contribute to your 401k. So that's 20 grand that's put away. You have kids. If you have kids that are over the age of 14, 15, maybe you're not the best at social media. So you have your son or daughter that's really good doing it. Or, they're in college and they're bringing stuff that they're learning to help your business grow, whatever. You can put your kid on payroll. And that's usually 9 to 10 grand that you can now put away, again, tax-free. And awesome. When they want to go to college, now you got their college fund paid for. Or, if they want to do like you and be self-employed, or if they don't want to go to school, cool. You gave them money to go learn a trade or buy a house, whatever.
My oldest is 8 years old, so we got a little ways before I get to that point, but that's something I'll definitely keep in mind. Could I pay my spouse, though? Could I hire my wife to do some administrative 100%. Stuff?
So that's another thing where you're still the best employer in the world. You hire your spouse, start contributing to their own 401k. So you guys are maximizing what you're contributing to retirement. So 401k is a great way. There's also HSA contributions, FSA contributions. So family savings account, like your kid that's 8 years old. Use FSA contributions, send your kid to camp if you want for the summer. Have your company pay for that. Because the IRS still understands that you have to run a business and your kid, has summer off. So how are you going to do both? So there's ways that you can have taking care of your kid and stuff run through the business. But those are all ways to maybe, depending on what your income level is, to reduce what you pay in federal taxes. So if you're about to go over the 160, 180K mark, you go from paying 30% in federal taxes to up to 42% in federal taxes. So if you can contribute more to retirement, life insurance, HSA, FSA, putting your spouse on payroll, maybe that reduces your overall net income, which reduces your overall federal requirement on what percentage you pay for over the year. So that's the other thing that you can now take advantage of. And that's where, like I said, no one fights for self-employed, unfortunately. Anyone that's in Congress or in the Senate, even if they started out with their own business, they turn it into a corporation eventually. So that's what's getting fun. But you can now take advantage of all that. And that's what we advise you on.
So synthesizing all these benefits that you just mentioned, we went from being a sole proprietor where you have to pay at least 15.3% on all of your income that you take as a business. Now you get to save a chunk by paying yourself a salary, which that gets taxed, but then you can take a distribution. But that distribution you can actually avoid a lot of federal income tax on by sending it into tax advantage retirement accounts or paying that out as payroll to family members, getting it to yourself and your family, but without it hitting your adjusted gross income.
Yeah, that's the main reason, is just to reduce what you pay in federal taxes, what you have to pay to the IRS.
And then, correct me if I'm wrong, if you have a health insurance plan through healthcare.gov or your state's exchange, you get premium credits based on your adjusted gross income. So if you're reducing that number through all of these other methods and moving money into retirement accounts, you are reducing the amount that you have to pay for health insurance.
Correct. And you also get, as an S-corp, you get better healthcare options. You're considered a group rate. You can now save, just like you were stipulating, but you can also get better healthcare options than whatever your state offers or anything like that. Or just paying the crap out of premium for it. But that's where the HSA contributions come into play too. Try to maximize what you put into HSA so that when you do have to pay that premium or pay that, copay or whatever it is, you can just take from your HSA and that's tax-free.
So there's so much goodness here. I feel like we just presented this beautiful, delicious, juicy, steaming, perfectly seared steak that everybody's drooling over. Is it right for everybody, though? Like, can anybody sign up to be an S-corp? Are there any rules and regulations that dictate who can and cannot take advantage of this tax election?
Yes. Unfortunately, not everyone can. Like we talked about before, you have to get incorporated at the state level. Whatever that incorporation means, LLC, PLLC, S-corp, like if you're in the state of California, you need to be able to get incorporated at the state level and then be able to do the election at the S-corp. There's certain states that you can't get incorporated in certain industries, or you need to have an extra license or a different qualification at the state level before they allow you to get incorporated. For instance, like in the state of Texas, you can't just be a real estate agent. You have to take that extra step and be a broker, which entails doing extra classes, stuff like that, before the state of Texas will allow you to incorporate it. No matter what, if you're a real estate agent in Tennessee, you can't be an S-corp. So you just got to pay that self-employment tax because they won't allow you to incorporate. So if you go to your state website and you're not finding out the service or whatever you provide, it's not right there saying, or you don't know other people that do the same type of services that are incorporated, that's when I would reach out to an expert. And it might be, unfortunately, that there's maybe something else you have to do, or maybe it's just not available.
So lots of information to chew on. If anybody has questions, could they contact you? Like if somebody wants to figure out more if this is a right fit, and if it is a right fit, want to start taking first steps to actually pursue this option, where can they learn more about you? How can they get in touch?
Awesome. So what I'll do, David, is I'm actually send you over a link. If you want to share it in the description, you can schedule some time on my calendar that works with your schedule. We'll meet for a half hour, learn about your business. If we're not a good fit, no worries. You got a good lesson on the S-corp management and stuff like that. But if we're a good fit and you use that link I send David, we'll get you 2 free months of service to get you onboarded. And then we'll also give you a 10% discount on your service. But you got to make sure you use
Awesome.
that link I'll send David. David was one of my first customers I've signed up here with Formations. So, and, he's been a big advocate for us. And, I know we've helped him out. So feel free to reach out and see if we can help take care of you too.
Joe, that's super generous. Thank you so much for offering that. So I'll definitely share that link in the description. And if anybody wants to reach out and have a conversation, they can use that, get in touch with you, and start making those first moves to level up their business. Joe, this has been awesome. Just getting to chat with you, finally get to present some of this really valuable information to my audience that I've been kind of sitting on for a while, just because I wanted to make sure that I wasn't misrepresenting anything. So thank you for bringing your expertise and spending some time with us to steer our audience straight.
Oh, thank you, David. It was my pleasure. I'm definitely happy to educate people, maybe hopefully erase some of those misconceptions you've had. The biggest thing I hope you take away from this is get an LLC. And if you're making over that 60K threshold, let's make an S selection. Get someone like us. Get someone to help manage that, and then take advantage of more tax benefits that you can take.
Appreciate all the support that you and your colleagues have provided me. I say all the time here that self-employment shouldn't be by yourself employment. And so I'm really glad that there are resources like Formation, that there's people like you, Joe, who are here, who are available and happy to help us grow and keep moving forward.
Well, thank you, David. And we'll obviously chat again soon, but hope to hear from some of your audience here shortly.
Thank you to everybody who's watching. Again, if you have any questions, be sure to click the link, book a call with Joe, learn more, and start moving forward. I'll see you in the next one.